There we are. Second go today. Had some sound issues on the last one. Don't quite know what they were, but sometimes get this. It's not the microphone. It's not my equipment. It's the streaming service that I use. It happens infrequently, probably about once every couple of months. So here we are. My name's Kevin Wright. You can see that on the screen. And we're here for, there we are, Zakk. Yep, see, it's fine now. It's, yeah, I don't know why it does it. I use a facility called StreamYard, and that blasts it out to Facebook, various points in Facebook, YouTube, LinkedIn, all that sort of place. So occasionally it happens. The only thing you can do is cancel it, start again, which is what I've just done. Fortunately, my tea's okay, and that's fine. So second crack at a Monday morning Q&A. And what we do for people that we know, Zakk and Aston are regular visitors. But if you're not a regular visitor, what do? Well, you fire some questions into the chat box, and then I answer them. And a few people saying the sound's much better. Yeah, it is good. Sounds. I can't hear it. It sounds same to me. So some more people saying good morning. So great, good to have you here, guys. So what do? It's question time. So if you're watching and you want to know anything about property finance, pop it in the chat box, and we'll happily answer those questions. Interesting question. I think it was one of my students, Andrea, popped a question in one of the many property Facebook groups I'm in. Said she's got a Japanese knotweed property to look at this week, and she just asked the question, should I buy it or not? Now I always find these posts really interesting, because you get the standard responses, no, or even no, and there was one of those, or run away, or all types of things like this. These are the typical responses you get. But of course, and I put, I saw it pretty much as it came in. So you got these little GIFs, haven't you? You put these things, and so I found one with the guy sitting there eating his popcorn. Okay, I'm going to watch this. So I just popped that in for a bit of a laugh, and but it overlooks a lot of reasons why a Japanese knotweed property is really good. First of all, it doesn't cost you anything to treat it. Now, of course, you've got to pay to have it treated and get it into a 5 or a 10-year treatment program, where it gets a regular spraying every year. But and you have to pay the contractors. So how can you not have to pay for it? Well, because you get tax relief of 150% of the cost. So not only does it not cost you to treat Japanese knotweed, you get paid for treating it, in effect. So that's great. And if with Japanese knotweed properties, you can usually buy them at a big discount, because of the fact they're unmortgageable if they're not currently in a treatment program. And if they're unmortgageable, that means that cash buyers only can buy them, and cash buyers never pay the top dollar for anything. So, and the owner probably knows that, so they're ready to let it go at a cheaper price. So you can pick up a really low price property. You might have to wait a bit for the seller to become attuned to accepting a lower price, but they will sooner or later. And then stick it in a treatment program. Once it's had its first spraying, it's now mortgageable with a number of lenders, and they make great renters because, let's be honest, tenants don't give a fig whether it's got Japanese knotweed in the garden or not. It's not so good if you want to flip it. because people are going to get a bit scary about buying a property with Japanese knotweed. But just buy it cheap, treat it, uplift. That will uplift the value. Put it in a mortgage and get your cash back out. Great deals. We've brokered many of great deals with Japanese knotweed over the past 10 years. Need some questions, guys. We've got some comments in there, but no questions. And I'm here to answer questions. So normally hang around till about 9. If we don't get any questions, it'll be a bit shorter this morning. But yeah, so yeah, that was really interesting post, and I always love to watch those posts because you get some really funny ones. Okay, got some questions coming in now. Okay, so so this says Facebook user. Now, what that means is that the person hasn't given their permission for Facebook to publish their name. It's just a StreamYard thing that or maybe it's a Facebook thing. I don't know. But I'll find out who it is when I drill back into the answers later on today. But anyway, good morning. Yes. What if Japanese knotweed is on an adjacent plot? Yeah, that's a really good question. Because sometimes it's not that it's on your property, but it's on the next property. Because for mortgage lending purposes, there can't be any Japanese knotweed within 7 meters of the property. So what do you do? Well, first thing to do is to talk to the owner of the property, if you can find them, and say, is it in a treatment program? And if it is, great, get the details, and now the problem's sorted. If it isn't, you can point out that it's a reportable substance and they should have it in a treatment program. And if they say get lost, now, bearing in mind that you can get 150% tax rebate on the cost of treating it, why wouldn't you offer to put it in a treatment program and pay for it? If I'm sure the neighbour wouldn't object to you paying to treat their Japanese knotweed. You can point out to them, actually, you can never sell your house on a mortgage because no mortgage dependent buyer can buy this property. So actually not treating it is a bit of a cutting off your nose to spite your face, really, because you've got a property that isn't mortgageable if you ever want to sell it. But hey, let me treat it for you. Tell you what, I'll pay for it. So, if there's enough in the deal, and of course you'll get it back in your tax return, why wouldn't you do that? JC, good to see you back with another question. Why does some bridging finance only lend on 180-day value? Well, simple reason, because it's their money and they choose how they want to lend. So, whoever lends the money sets the rules. So why? Because they want to, really. Now, some bridging companies lend on open market value. Some lend on a 180-day value. Some also lend on a 90-day value. So it's simply that, they choose the basis of what they want to lend on. Now, see, there's the skill of a broker, because a savvy bridging broker wouldn't necessarily go with the 75% loan to value. They'd say 75% of what? And actually on my advanced training course, I work this out for my students. We look at actually a bridger that lends 65% of open market value will actually net you more money than a bridger that lends 75% of 90-day value. So there we are. That's your answer, JC, because they want to, and it's their money, so they can do what they like. Who we got now? Ches, hope I pronounced that correctly. can I let a refurb before I refinance to a buy-to-let mortgage while I still owe a bridging loan? Yes, you can. You just need to get the bridger's permission. And when we're setting up the loan for you, if we're your bridging broker, you would tell us that, and then we would select a bridger that is okay with you doing that. So yeah, pretty good. LD says top of the morning. I reckon that's you there, Morgan James. There we are. If that's you, great. Okay. So hopefully that helped your question there, Morgan. JC's back with another one. After looking into some bridges and talking to some mates who use bridges, it isn't easy as some people claim. Well, it may not be as easy as some people claim, but and who are you looking into it with, JC? If you're not looking into it with us, when we brokered hundreds of bridging loans, literally hundreds over the past 10 years, well, maybe you're getting a disproportionate view. For example, a bridger was worried about a flood risk on a medium flood risk area. Okay, JC, here's what you need to know about bridges and bridging lenders. They're only interested really in one thing. How are you going to pay us our money back? Now, the only way you're going to pay a bridger their money back is to make a property mortgageable. And if it's unmortgageable because it's a flood risk in a medium risk area, or you won't be able to get buildings insurance, then you won't be able to make it mortgageable, so you can refinance it onto a mortgage or sell it to someone else that needs a mortgage. So they're not going to lend to you. Now, this is basic stuff, JC. So if you'd be talking to me, I'll be telling you that straight up. You know, bridges are not going to lend when you've got no clear way of giving them their money back. So again, on my advanced training, when we're looking at these problem properties, you know, the first two things that I say is you've got to get clarity on the problem, and then get clarity, can you fix it? If you can't fix it, you shouldn't be buying it, and bridges won't lend on it. So you don't use bridging for every property and every circumstance, because it doesn't always work. You have to be selective. And I've been teaching people for the last 10 years how to be selective. So maybe we should have a conversation, JC. Okay, Stuart, there we are. How is it possible to pull all of your money out of a deal in reality? Well, often it isn't, quite simply. So, you know, there's a fair number of deals where you can't pull all your money out straight away when you refinance it. Conservative with my figures, it seems like every deal I find involved leaving at least 25 to 50% in. Well, leaving that much in, I would suggest you're looking at the wrong deals, fella. What you're probably looking at is the deals that everyone else is looking at. So you need to be looking at the stuff where you can buy it cheaper because it's got a problem, and then you can add bigger exponential value. So you still probably won't get all your money out of a deal, but you're not going to be leaving. Yeah, you're looking at the wrong deals that are too mass market, that everyone wants to buy, that you can't buy cheap enough, and you can't add enough value. So that's that I would say is the reason. You've got to change your focus. Start looking at more problematic deals. So it's the more problematic deals that you pull more of your money out. I wouldn't say you pull all your money out. You might, but you might still leave it. The key is, can you leave enough in that you can pull it out in a year or two? And if you can, that's probably a good deal. If you need any help with that, Stuart, I'm going to be doing some events starting next month. They're called a Buy, Refurb, Refinance Summit, where I teach people how to do this. I have another couple of great speakers as well. I'm going to run them in London, Leeds, Bristol, Birmingham. So I'm going to pop the link in here and just click on it, Stuart, see if there's one not too far from you, and come and spend a day with me, and I'll teach you how to do this stuff. spelling. Enter. Yeah, there we are. brsummit.com. So come and spend a day with Stuart and I'll teach you how to do it. Okay, Stephan's popped up with a question. Yeah, I was sort of half expecting that question might come up. What is 90-day or 180-day value? Okay, so it's simply what is the price if you have a restricted time frame to sell it in. So 180 days effectively is 6 months, 90 days effectively 3 months. So a RICS valuer would give a value if it's open market value. How much could we sell it for if it takes, I don't know, a year to sell it? X amount. How much is it worth if we had to sell it within 6 months? It's a bit less. How much is it worth if we had to sell it in 3 months? It's worth still a bit even more less. So why is that? Because if you need to sell something quick, you have to sell it cheaper. This is not just property. This is just life in general. Any commodity, you want to get shot of it quick. You have to drop the price. Good. Danny, there we are. Good to see you. Yeah, it's one of my Ninja Investor Program students. I've done my advanced training and actually putting it into practice with a cracking refurb project. You've been busy. Yes, you have been very busy. And I've been watching your updates. For everyone else going through a huge refurb project, had I done this project and having not done Kevin's one-day course or his Ninja Investor Program for initial buying it now, I would have been in a much worse position. Good. Okay, so this is just a big up for my training. Well, I don't mind you doing that, Danny. Yeah, so hey guys, if you haven't done any training with me yet, you know, Danny has. He's done the elementary 1 day and he's done the advanced 4 day. And now he's reaping the benefit of that. Well, he will do when he's finished this project and either refinanced it or sold it. So thanks for that, Danny. Always good to have someone validating that I walk the talk, teach good stuff. Good. There we are. Thanks. Matthew says, I'm coming on a course. Great, Matthew. Fantastic. Well, you've got the link there, fella. So just pick the one that suits you. London, Leeds, Bristol, Birmingham. And I'll look forward to seeing you, Matthew. So there we are, whichever one of those suits. Dates, in case you're interested, it's, what's the first one? Leeds, I think that's the 11th of September, Saturday the 11th. Bristol is Friday the 17th of September. London is the following day, Saturday the 18th. That's getting fairly fully booked now, the London one. And Birmingham is on Saturday the 3rd of October. Here we are. Stephan says, thank you. No problem. Aston, there's another one of my students. Back up what Danny says about the training. I am not investing in a whole different, I think you mean you are investing in a whole different way than before, looking at bigger deals. Oh, you're now, okay, right. You're now investing. Yeah. Okay. So you're now investing in a different way before. Yeah, you are. And you know, we're just helping you. We're just helping you to do a deal which is more than twice as big in terms of value than the dearest property you ever bought before. So yeah, that's good. Yeah. Matthew said, you need the Sunday course. I don't think I'm not doing any on a Sunday at the moment. I don't think this year. I do occasionally do ones on a Sunday. I don't think I am. Let me just check. Have a quick peek at my diary. Saturday, Friday, Saturday. Oh, hang on. There we are. Yeah, the Sunday one. Yeah. So the Birmingham one, 3rd of October, Matthew. Yeah, so it's the 3rd of October. Yeah, that's it. Yeah, so it's the 3rd of October one. Yeah, 3rd of October, Birmingham. Yep. So get yourself up to Birmingham on the Sunday, the 3rd of October, and I'll look forward to meeting you. There we are. Good. That's it. Hey, yeah, we got it. Good. Fantastic. Okay. Well, I look forward to meeting you there, Matthew. And we'll have a couple of other good speakers. I haven't worked out which one they are, but they'll be buy, refurb, refinance related speakers. We get them on all sorts of things: tax, planning, value, risk valuations, all that sort of thing. Okay, so we're coming up to the 9 o'clock, which is, I'll say I'll be here for about half an hour, but I'll carry on asking questions. So we've got one more question to answer so far. So, hey, if you're watching this, you got a question, you got to be quick. Otherwise, I'll be off. And I'm not back next week, actually, because it's Bank Holiday Monday. So it'll be 2 weeks from today. So here we are, which could be the last question, D121. There we are, unless someone else sneaks in with another one. Can I get a buy-to-let on a freehold property if my spouse is on a 2.5 spouse visa and I'm a UK resident? Simple answer, yes, you can. So what you've got is your spouse doesn't have a British passport. They've got a passport, in a different passport. You know, it doesn't matter which one it is. Can be anywhere in the world, really. But they've got a visa, yeah. So the lenders would ignore your spouse on a visa and look at you as a UK resident. Now, it depends on what basis you're here. Now, if you've got a UK passport, no problem at all. If you've got indefinite leave to remain, no problem at all. But if you're on a visa as well, then that could be an issue. So yeah, so if you buy it jointly, they look at the lead person, which would be you. Good. There we are. Zakk said, I asked one. Ask one, what's that? Ah, he's there. There we are. D121's come back. Yep, I'm a UK British. Yeah, no problem, then. No problem. And hey, if you'd like us to help you on that, let me give you a couple of ways. Yeah, we'd be happy to broker that buy-to-let mortgage for you. Let me give you this, so you can either contact me on my Facebook page, Kevin Wright Property Finance Expert. Let's just pop that in there. Pop that in there. So send me a message there. I'll be checking that today, and then we'll help you with that buy-to-let mortgage. Alternatively, you're coming through YouTube, so go to the home page, look at the tabs along the top, pick the one that says About, and you'll see my contact details in there. So whichever way helps you on that, happy to do that for you. Yeah, happy to broker that for you. Good. Okay, now I skipped one down, so let's have a look. JC's back with another one. Do bridgers always send an asset manager to the property after sending a valuer to see the property but before they approve the loan? Simple answer, JC, no, they don't. Some bridgers like to, other bridgers don't. So the ones that send an asset manager, it's just an additional, typically it's an additional check on you, the borrower. They just want to interview you, the borrower, and also have a look at the property as well. Yeah, some bridgers have an asset manager doing that role, but not all of them do. Right, I've just seen your ones. Right, okay. How long does it take to refinance to buy to let from a bridging loan? Well, as long as the mortgage lender takes to process it is the answer. Now, the fact is that mortgage lenders are still slower processing times post-COVID than they were pre-COVID. Now, as brokers, we're seeing that in some cases, mortgage lenders are taking as long as 3 or 4 months, some 5 or 6 months. Not all of them, some of them are faster than that. But generally, you've got to allow at least a couple of months for most lenders. There we are. Okay, Zakk says, question at 8:46. Right. Let me see if I missed it, Zakk. And thanks for pointing that out. I do try and scroll down carefully so I don't miss any. Aha. Yes. I did miss it. Thanks for the nudge. Don't want to miss out anyone's question. And you're someone that pops in regularly, so I certainly don't want to miss your question, Zakk. If I'm buying an 80k house using bridging, what are the rough costs of fees for 6 months? Okay, very rough example. 10% of the purchase price. There we are. Now, I've sat and worked this out on a number of different cases, and it pretty much works. So that covers the bridger's arrangement fee, it covers the valuation fee, it covers the bridger's legal fees, and it covers the monthly interest. So broadly speaking, 10% of the purchase price. So if you're buying a property for 80k, bridging's roughly going to cost you 10%. So £8,000 for 6 months, Zakk. Yeah, and I'm sorry I missed your question. And thanks for nudging me, because you got it. By nudging me, you got your answer. I think Matthew said that. We got that one? Yeah, that's right. Yeah, Matthew's coming to the course. Great, Matthew. See you in Birmingham. Now, here we are. Scrolling back down. Making sure I don't miss one. Stuart says, see you in Bristol on the 17th. Fantastic, Stuart. Look forward to meeting you. JC, you're getting your quota in this morning, didn't you, JC? Well, no problem. Ask them, I'll answer them. Happy to do that. Do bridges still take out the cost of legals, even though you have already paid the lender's legal costs to your solicitor? Right. Okay. So here's what happens. Not all bridges do this, but a majority of them do, JC. So when you start the process, the bridges have their solicitor, you have your solicitor. Now, the bridges solicitor wants to make sure that they're getting paid. And so what they do pretty much before they start doing any work, they'll contact your solicitor and ask them for an undertaking that their fees will be paid. And they would detail what they are. So your solicitor then comes to you and says, hey, the bridger wants to know if I'm going to get paid, if they're going to get paid. So I need the money for their legal fees from you up front now. So can you give me that money? Great, whatever it is. And then they now send an undertaking to the bridger solicitor to say, yes, we confirm you're going to get paid. We've got the money already. We're sitting on the money. Now, that's called an undertaking. Now, from solicitor to solicitor, that's legally binding. So now the bridger solicitor is happy to start the process because they know that they're going to get paid at the end of it. So you don't pay it twice, you only pay it once, and that's how you pay it. You pay it to your solicitor holds it in their client account, and the bridger solicitor gets paid on the day of completion when the loan is drawn down. Yeah, so good quality questions coming in there from you, JC. I can see you've been digging around a bit, but hey, dig around with me, and I'll look after you. How long does it take? Right? Yeah, I think we covered that one, Ches, didn't we? Yeah, you asked that before. Yeah, so it's a minimum 2 months, but with some bridges, anything up to 6. Harpreet is another one of my advanced level students. Harpreet, good to see you, Harpreet. Ches, see you on the online 4th of September. Yep, that's it. Yeah, if you booked in for that. That's a live stream one for people that can't get to a venue. I mean, obviously it's better to get to a venue because you get the experience and you get 2 extra speakers as well as me. But for whatever reason, I do a live stream on the 4th of September. It's usually the first Saturday of the month, and the first Saturday in September is the 4th. So I'm doing it. So it's a live stream property finance masterclass. Oh, Harpreet's popped in with a question. Hope you're well, mate. I am. Thanks, mate. If a house is off market, can we use a market value bridge? Absolutely, you can. Yeah. Now, what happens then is because it's not on the market and they can't go for the asking price as a benchmark, they have to do the bridges valuer will do 3 comparable values. So they'll give you 3 comparable values, and the lending will be based off that. So market value bridge. Hey, for people that don't know what a market value bridge is, let me find one of my YouTube videos where I explain what market value bridge is, because there are different types of bridging. Actually, there's 5 different types of bridging. But let me show you what a market value bridge is. There we are. I've done a video exactly about that. Back with another property finance tip, and we're going to be talking about market value. Let's shut the video down. You don't want to actually hear the video. So there we are. Okay, so if you want to know what a market value bridge is, Harpreet does. He knows what they are because he's done my training. But for anyone else, just look into there and you'll see a short video, I think probably about 5 or 6 minutes, something like that, of me explaining what a market value bridge is. Good. So, Zakk, good morning. Thanks for your question. If bridging finance takes up to 2 to 3 months to clear the money, how does some people complete using bridging in 14 to 21 days? Ah, right. Okay. You're looking, if you're basing your question on Chez's one, that it takes 2 or 3 months to arrange a mortgage, you're looking at 2 different things, right? So bridgers are geared to lend the money to start the bridging loan in 14 to 28 days. That's why they're used extensively at mortgages. Sorry, beg your pardon. That's why they're used extensively for auctions. So most bridges, not all, but most bridges are geared up to lend within 28 days, so you can use them at an auction. Now, so if bridging finance this is at the back end. Chez was talking about the back end. So you've got the bridging loan, you've done whatever you're going to do to it, you're now refinancing it on a buy-to-let mortgage, and it's bridging lenders work fast, mortgage lenders work slow. So mortgage lenders take 2 to 3 months to give you the mortgage so you can repay the bridging loan, but bridgers routinely release the money or are ready to release the money within 14 to 28 days. I mean, we've done deals, 10, 11, 12 days, bridges. So I think you're getting confused there between taking a bridging loan out and paying a bridging loan back. Taking a bridging loan out is fast because bridges move fast. Paying it back is slower because mortgage lenders are slower. Hope that helps. Matthew, bridging with you might be the best way because you can have a quick look at the deal. I can, yeah. Particularly for people that are on my advanced training, like the people like Danny and Harpreet and we also had Aston in this morning. Yeah, that's one of the things I do. I help them with that. So I'll explain all that when you come to Birmingham, Matt. Good. Oh, here's another one. Ben, there we are. Another one that's done my training program. Ninja Investor Program. Okay, so the property I bought back in February in cash was unmortgageable. I paid the stamp duty on the purchase, but I've just realised I can claim that back. To be honest, I'm not an expert in stamp duty because that's administered by your solicitor. So if you can claim it back, you need to speak to the solicitor that handled the purchase. And they will tell you. Let's have a chat, and if you find that out, let's have a chat because that could be some useful information. Now, I think I might have just twigged what you're talking about. Now, properties that are derelict or uninhabitable, you don't have to pay, there's stamp duty exempt, but it has to be derelict or uninhabitable. So, for example, if it's unmortgageable, that's not the same as being derelict. So I think that might be where you're at on that. Because there was a case where a couple, can't remember the name of them. I've just seen your next one. The solicitor is useless, mate. Well, they're the person that's got to get it back for you because they took it in the first place. So what happened was a couple bought this property. It was literally derelict, and they were going to knock it down and build a new property. And so they took HMRC to court because they'd found out some legality that you didn't have to pay stamp duty, and they won their case. Now, that's not the same as saying, oh, it hasn't got a kitchen or a bathroom, it's unmortgageable, I'm going to fix it up and make it mortgageable. That wouldn't be eligible for stamp duty exemption. But if it is literally, badly dilapidated, then that might. So I think that's what your angle is there. Good. Okay. Zakk said, thank you. Good. Happy to clear up that. Do you have an office in Liverpool? Similar answer, Ches. No, we don't. Why do you want to know? Why do you want to know if we've got an office in Liverpool? Is that where you live? Ben says, cheers. No problem, Ben. Always happy to help you. Okay, so there we are. Ches, if you want to pick up with me privately, I've given you the link there. In my Facebook page, or as I said, you can go. You're coming through YouTube, so YouTube. So you can just go to the tabs at the top, pick the about, and contact us there. Hey, have you joined my Facebook group yet? Recycle cash for property investors. Some of you will have, no doubt. If you're not, let me give you a link. I'd love to see you there. It's just for people that are interested in what we chat about on these Q&As. There you go. Come and join my Facebook group, and you can post your questions in there any day of the week. I just turn up here on a Monday at 8:30, but if you're part of my Facebook group, you can post a question in there 7 days a week. There we are. Good. Good stuff. Okay, so no more questions. That means I'm off. And I won't be back next Monday, remember, because it's bank holiday. But I'll be back 2 weeks from today. What would that be? 6th of September, would it be? Is that? Yep. Ches says, great idea. Good. Okay. All right. Excellent. No worries. I look forward to seeing you on the 4th of September, Ches. So have a great week. Have a great bank holiday weekend next weekend. And I'll see you in 2 weeks' time. Great to see you.